Famous British author made a statement, facts are stubborn, but statistics are more pliable. That was Mark Twain. While Nigerians are hard-pressed on every side by rising cost of goods and services, the Nigerian Bureau of Statistics agrees to disagree. Yesterday, we saw the rebased consumer price index released by the National Bureau of Statistics saw inflation fall flat. From 34.46% in December, it fell to 24.48% in January. And that is all our show is about today. I'm your host, David Olujimi. For all of 2025, we've been hearing about inflation rebasing, GDP rebasing. And after a much acclaimed CPI rebasing, which happened yesterday, we saw inflation drop to 24.48% from 34.46% as of December 2024. A lot of national planning hangs on this data. It hangs on the CPI and inflation data. And the magical move, I use the term magical because it's a lot. It just is like it's like it takes away the allure of inflation, and the magical move is casting a lot of doubts about the veracity of the data put out by the National Bureau of Statistics. Let me help provide some context into why there's been a lot of doubt. No country has come up with that volume or that magnitude of reduction after rebasing their CPI methodology. South Africa did it in 2021, rebased its CPI calculation, and inflation declined by 0.2%. Kenya did it, inflation declined by 1.5%. And in some cases, like in Uganda and in Ghana, inflation actually went up, increased. There's hardly been a case where inflation went down by about 10%. In other words, 1,000 basis points. Also, the weighting system has also cast a lot of aspersion over the rebasing. As part of the rebasing, the contribution of food, non-alcoholic beverages, housing, electricity, gas, and other fuels to the CPI basket was reduced by about 72%. In other words, the National Bureau, NBS, is telling us that food, non-alcoholic beverages, housing, electricity, gas, and other fuels don't contribute as much to household spending as they used to in the past. I'll read up an excerpt from a story on BusinessDay. This was how it was stated. The combined weight of housing, water, electricity, gas, and other fuels, essentials for most households, has been cut from 16.7% to 8.4%, a 49% reduction. The question there is, really? Really? Even when petrol prices have gone up 6 or 7 times from what they used to be about 20 months ago, I was talking about May 2023, electricity bills have also increased exponentially. There's really a lot to digest from inflation data of January 2025. However, on the show today, we are taking it from a different perspective. We're exploring how players in the equities market are going to be reacting to recent inflation data. And on the show this morning, we have Omobolade Agbola, who is a macro and equities analyst with Chapel Hill, Denham. Good morning, Omobolade. Welcome to the show.
Good morning, and thank you for having me.
Yeah, so about inflation data, can I get your personal reaction on this matter? Is there any downside to NBS getting inflation data wrong, or is just data? Or is just, like I said in the beginning, facts may be statistics, it may just be statistics. Is there any, what do you think? How do you react to this matter?
Here at Chapel Hill Denham, it came in as no surprise to us. Even because without the rebasing, we're still expecting a moderation in inflation. This is on the back of the high base effect from last year and expectation of a stable naira in 2025. With the rebasing, like you already highlighted, there was an adjustment in the food weighting, which would significantly impact, because it has the highest weight in the index. It would definitely impact the dynamics of the index, and that is what we are seeing as, you know, it's impacted headline inflation, and now it is at 24.48. So for me, it came in as no surprise, because the price reference period was also 2024. So it wasn't a surprise that, you know, we are seeing this kind of moderation in inflation.
Okay, Thank you very much. So, with inflation at 24.48%, I want to talk about the NGX, the equities market, basically. People talk about the fact that when we want to access the performance of the market, one way we access it is we access the returns of the all share index against inflation in a way. So, do you think we have a benchmark for where we'll be expecting the NGX to perform to? Because if we have inflation at 24.48%, some people are projecting that inflation may decline to 15% this year. We don't know what is going to play out at the end, but do you think that figure, let's say this figure, let's be hypothetical and say, do you think this figure, 24.48%, is the benchmark for where we are expecting the NGX to perform to, or you are projecting a different reality?
At Chapel Hill, Denham, our projection for the equities market is ranging. We have a bear case of 18%, a bull case of 45%, and then a base case rather of about 38% in 2025. And this projection is benchmarked on four major things. First is the recovery in the non-banks. That is on the back of stability in Naira. And we are also seeing that playing out in their Q4 results. If you are looking at the October to December standalone results, we've seen that most of them are returning back to profitability, and that would spur buying sentiment in the equities market. The second thing is the expected positive impact on post recapitalization of the banks. The third thing is that given an expectation of strong performance in the equity in the stock companies that are listed on the exchange, would expect higher dividends in 2025, and which we expect to spur positive sentiments in the market. And lastly, the possibility of new listings on the NGX in 2025 is also going to spur activities in the sector. So that's our projection for the equities market in 2025.
Okay, so there's no, you don't think that this data somehow affects the way investors are going to be reacting to the market? It's not going to be affecting any way the market is going to be playing out. There's not, or
so in terms of affecting the market, I think that it's something that most investors already knew, and they had already taken position in before the rebasing. The results eventually came out, and the result just confirms what the expectation of investors has been. If we look at the treasury bills that have been treasury auction that has been going on since the beginning of the year, we see that on the 365-day instruments, interest rate has been declining at every auction, which just brings to the fact that investors are trying to lock in high yield looking at high yields, so that when interest rates start dropping, they are still at a good place. So I believe that it will not have significant impact, especially even in the equities market, because the dynamics in the equities market has changed from what it used to be before.
Okay. So when the results was released yesterday, there was general, I think, public reaction to it was skepticism. That's the word I would use. So in the analyst corner, I think it may be different, but there was a lot of skepticism around the figures. Do you think that are you seeing investors adjusting their strategies, or basically they are largely ignoring it based on how you're observing, how you think it's going to play out? Is there like people just ignore the data, or are investors adjusting their strategies based on what came out yesterday?
I don't think there's an adjustment of strategy. Like I earlier mentioned, what is happening is they're already taking position, and even the loss that we saw in the equity market yesterday rather, I believe it is more about profit taking. As you know, that there's been some of these banking stocks that came in last year to raise capital in terms of right issue or public offer have some of the at a lower price than what it is currently trading at.
Yes.
So some of these stocks have been listed back on the NGX, and so we see profit taking. It is normal that if you did a Zenith Bank at a right issue at about 36 naira, and then now it's already 50. It is normal that we'll continue to see profit taking. So in terms of adjustment of strategy on the fixed income leg, I believe, like I earlier mentioned, that investors have already locked in at already locking in at high yields, and so there is no change in strategy. It's just something they've already been doing, and I don't think that there's any significant change in the equities market either, except profit taking. But we'll continue to see how it plays out going forward.
So now today is Thursday. We are seeing the CBN. Sorry, today is Wednesday. CBN's first MPC meeting for the year is holding. Do you hawkish, dovish, or do you think the CBN is going to hold rates? What direction do you see the Apex Bank moving with respect to the decision from yesterday? Do you think they're going to now, with inflation at 24.48%, we now have our benchmark rate a little bit higher, like 2 or 3%, just 2% plus higher than inflation. Do you think the CBN is going to make a move and let's cut it down a little, or what do you think? What direction do you think the CBN is going to move in?
In my opinion, I expect that the CBN will hold rates because this rebased figure is the new one, and then they would like to see how inflation or the pricing of commodities go on in the rest of the year before taking a definite stand. So my expectation for this MPC meeting is that rates will be held at at the current rate, 27.5.
Thank you so much. Then one last thing. A lot of foreign investors have been looking at Nigeria in 2025. Basically, our rates are high. I'm talking about fixed income rates high when it comparing to other developed market like the US or even other emerging markets. Our rates are high. What else? Our currency is doing relatively well. Our currency is one of the best performing this year, especially in Africa. Last year it was Kenya, but this year we are seeing the Nigerian naira do a lot. It's been a lot of boosting, and foreign investors are beginning to tilt their focus in the direction of Nigeria. But now we are seeing inflation figures at this level, meaning that rates may not be as high as they used to be anymore. We've been seeing the CBN declining. We've been seeing the CBN decline their returns on T-bills over the last couple of issuances. The last 3 issuances has been a consistent decline. So how do you think these figures, how do you think this will play out on the investor, especially foreign investor confidence? How do you think this rebased inflation figure will play out on their confidence, on the confidence of investors in Nigeria?
I'll first of all answer the question by highlighting the fact that rebasing is meant to be done every 5 years.
Yes.
And then the last time we did a rebasing was in 2009, and which is relatively a very long time ago. Doing it now, it's a step in the positive direction, better late than ever. And so I think this is a positive step. And looking at foreign investors and what they think, I think foreign investors, one of the challenges they have the thing that concerns them the most is exchange rates, and we've seen stability in the exchange rates in the recent times, and so we expect that in 2025 it does not negatively impact foreign investors' confidence, and this rebasing is just going to continue to strengthen. Foreign investors' confidence in our markets.
Amen. I say amen to that because I hope in the next 5 years we follow through with what is expected, because I feel like Nigeria has a system of we do things, I don't know, 1990, 2013, then we wait for another 12 years to do it again. So finally, the last question, sorry for that detour. if inflation rebasing leads to lower interest rates, how do you think it will affect liquidity in the stock market? Do you think more funds are going to flow into the stock market because rates may go low? Rates may go low in the fixed income side. Do you think people will begin to tilt their funds towards the stocks and equities? Or basically, how do you think it will affect liquidity in the stock market? Is there going to be an affectation? Anything else? Is it going to have any effect?
Okay, so for the rebased figure and the equities market, I think that the dynamics in the equities market is quite different from what it used to be. Textbook will say that in a situation where we have high interest rate environments, that the equity market is going to suffer for it. But we've seen that in the last 2 years, the reverse has been the case. We've seen the equities market even still deliver
Yes.
better returns despite high interest rate environment. And so I think that even in this situation, we'll still see positive reactions to the equities market, despite even if there is lower interest rates in the environment. So I think that the equity market will still enjoy positive reactions from both foreign and domestic investors.
So thank you very much for your time, Omobolade. It's been a pleasure, and thank you for your insights. Great work you're doing. Have a very
Thank
lovely
you very
morning.
much for having me.
Yeah.
And you too.
So on Friday we're going to talk about the inflation rebasing. Some people are trying to understand what happened, how did it go on, how did the inflation move from 34% to 24%. It looks, like I said, it looks magical. It looks like what's going on. On Friday, we're going to have a breakdown of that figure, and we're going to explain the weighting system of the CPI. Thank you so much for joining us. This is Economy and Markets on Business Day. See you again on Friday.